Tesla reporting a miss on earnings as profit slides 44%. Gross margin also taking a dip in the third quarter. Here for a deeper dive is Tasha Keeney, ARC Investment Director of Investment Analysis and Institutional Strategy. So Tasha, stock right now it's about 0.3%. Give me your take on the print here.
Yeah, well, you all did a great job of covering the highlights. So let's talk about the details. Tesla said that it doubled its AI training compute. Why does that matter? Because Tesla has this immense data advantage over peers when it comes to solving for robotaxis, because it's using its customer cars to gather information. So now we think that Tesla's getting over 2 million miles in FSD, its full self-driving software, per day. I mean, compare that to robotaxi peers. That's like half of what, Cruise, GM's effort, has gotten in its entire lifetime. So I'm really excited to hear about robotaxis on this call. We heard last quarter that there was a traditional automaker that was considering licensing Tesla's full self-driving software. I want to hear more about that. And I'm excited to hear about the launch of Tesla's own robotaxi network in the future.
I know, hey, Tasha, it's Julie here. I know that's been part of your thesis and a lot of Bull's thesis for a long time. And yet Tesla, in classic Tesla fashion, they talk about stuff for a long time before it really comes to fruition. So if that's the investable case, and not just when am I going to see robotaxi on the road, but like critical mass, right? What's the timeline for something like that?
I hear you. Elon Musk has a long history of predicting things and then being late on those timelines. He's certainly gotten better at it. But ARC has always had 2024 as the midpoint of their launch of robotaxis. So I still think that's possible. But here's like the information that we do have, right? Why should you believe Tesla's statements? Well, we're seeing these videos that they're Tesla is putting out of full self-driving capability. No hands on the wheel. They released a recent video of Austin recently, the car driving successfully on and off a highway. But more importantly, we're seeing videos from customers. And actually, someone in California did a full ride-hail ride where they don't even touch the wheel at all, just the very beginning and the end. So it looks like it's really, really close to being there, certainly in some situations, right? And then to your point, when is it going to be available everywhere? Well, I think they'll start, in the major cities where it works the best. So we'll see it in places like California and Texas, where, we know that there's a heavy density of Teslas today, and the cars drive well there. I think in the next decade, that's when we could begin to see, robotaxis dominating urban transit as a whole. So that's what we're excited about as at ARK Invest. And I think that this market could be worth, nearly $9 trillion in the next decade or so. Tesla is really the leader in this, again, because of that massive data advantage.
Let's get to the profit shortfall here for just a moment, and we'll talk about the Cybertruck as well. But automotive margin falling for the fifth straight quarter here, ex those regulatory credits, 16.3% was the margin, below the average analyst estimate. Is this a problem for Tesla?
So, yeah, we expected margins to decline. We know that price cuts there's been significant price cuts over the past quarter. We even heard Elon say in the last call that they could continue to cut prices because of interest rates, because of, how consumers are feeling, and they need the cars to be affordable. But let's talk about the big picture, right? A Model 3 is actually cheaper than the average car in the US. That is huge. Electric vehicles are continuing to grow at a rate that's much faster than their gas-powered counterparts. So I think that's the long-term story here. So yes, I would expect it to affect margins in the short term. Long term, our estimate is that Tesla could get margins that are around 50% with electric vehicles and autonomy by 2027. So that's, again, what we're excited about. And autonomy really changes that whole profitability profile, because we think a robotaxi network could be a services business where, again, you'd get really attractive cash flow coming off of each vehicle per year, right? It's not just a one-off sale anymore. So, I think it's affected. I would consider it a short-term metric. We do see them bringing costs down out of the car continually. They did that again this quarter. I expect that to keep happening. And they're riding down a cost decline curve that no one else can keep up with on electric vehicles, especially since they're so vertically integrated on batteries. So I'd be much more concerned about traditional autos and their competitors than I would be about Tesla.
And Tasha, what about the Cybertruck? We heard today production remains on track for later this year. First delivery is scheduled for November 30th. What do you think demand is going to be like for that truck, Tasha? How much of a tailwind do you think that's going to be for Tesla?
Yeah, I think the Cybertruck could be huge. We have some research about it on the ARK Invest website. My colleague Sam Kors has done a lot of great work. We've looked at Google Trends information, and it overlaps, really well with areas in the U.S. where we have that, very interested truck buyers today. So I think some people think this will be a niche vehicle platform. I don't think so. If I was Ford, who's, they're already cutting the production shift at the F-150 Lightning plant in Detroit, I'd see more trouble coming for them ahead as the Cybertruck rolls out. I mean, maybe that's even why they're cutting production. Maybe people are holding out because they see that Cybertruck delivery deadline right around the corner. And when we saw a vehicle go for $400,000, one of the early reservations this past quarter, it's obviously a multiple of the purchase price. I mean, it's already a collector's item before it's even in consumers' hands. I mean, that's just the power of the Tesla brand. So I'm excited for it.
Tesla shares are extending their losses in the pre-market trading. Now, the stock initially popped after reporting its fiscal third quarter earnings after the bell on Wednesday. But once the call started, investors started to sour on these results. You're looking at losses of just over 6.5%. Here with what went wrong, Yahoo Finance senior autos reporter Praz Subramanian. Praz, looks like the street's not too satisfied with these results.
Yeah, hey, Shauna. Yeah, kind of big picture there, that miss in the top and bottom line, slight dip in margins, sort of kind of weighing on the stock. And of course, a number of things also coming up there for the company. And then also sort of the sort of concern about, so the global economic environment. But yeah, on the call last night, a number of things came up with Musk, CEO Elon Musk, talking about three big things here. I want to note Mexico, the status of that plant, the Cybertruck, and of course, outlook there for the company. So with Mexico, that's the next giga plant that came up in the call, and Musk sort of surprised someone. He said that they might be backing off on fully building out the plant at this time. Here's what he had to say on the call.
We're laying the groundwork to begin construction and doing all the long lead items. But I think we want to just get a sense for what the global economy is like before we go full tilt on the Mexico factory. I'm worried about the high interest rate environment.
So Musk mentioned that high rate environment multiple times. I heard you guys talking about that just now earlier in the show. So, and that's sort of also on his mind as a sort of a weight on the sort of build out of the plant, because he's concerned about where the economy will be and whether they need to keep making cars and expanding their volume there. So secondly, the Cybertruck, of course, huge news. They announced that the November delivery date in the shareholder deck, they teased it with the picture there. And then they tweeted out that actually the November 30th will be the actual event date for delivery. So good news there, but it wasn't all good news for that Cybertruck. Musk sort of painting a dim outlook, talking about how, quote, we dug our own grave with Cybertruck, warning that the production of that car is an enormous challenge, and reaching volume production will also be a challenge. And he added that it'll probably take 12 to 18 months before the Cybertruck is a positive cash flow contributor for Tesla. So not exactly the savior that many had seen for the Cybertruck for the company, right? Finally, outlook. Tesla reiterating that 1.8 million unit production forecast, hinting that sort of Q4 will be a big quarter if they're going to meet that goal. Long term, it's hard to see how a slowdown in Mexico helps them reach that 50% CAGR growth rate that they've talked about before. It seems that Musk was asked about that growth rate, and he laughed it off, saying that if we did that, you would have more cars in the world would ever need. But it's funny because Tesla was the one that came up with that target as their long-term growth rate. So that's sort of ironic there. A little outlook point from Musk and Tesla last night in the call.
It's really interesting. Everything that you were breaking down there, process, especially on the Mexico plant, which if that impacts the Cybertruck, that's perhaps enough to make optimists' ears go ruh-roh. But at the end of the day here, you got to think about where this company is able to still, in the interim period, bring in margins, especially amid this pricing war. Did they give any type of details around where margins are are either under pressure as we were tracking these results and knew that there was going to be some strategy to place attention on the Cybertruck, especially while there's this margin pressure that is ensuing as a result of their pricing mechanisms that they have put in place over the most recent quarter.
You know, it's interesting. Margins came up a lot in the prior last quarter's conference call and didn't really come up much here. I think it's a given that Tesla is saying, we're going to go for volume and we're going to sacrifice margins as a result. And 17.9% gross margin is not that bad when you compare it to the other automakers there. So I think there's the street is probably saying, we accepted this story. Musk did say though, or Tesla did say that the expansion and sort of productivity at Giga Berlin and Giga Austin was improving. They're going to see more volume there and probably better productivity, so that might balance out any potential effects of cost cuts for those cars. So that's a positive. And then that Gen 3 platform is still supposedly on the way, and that will be when that thing actually is being made in a different sort of innovative way. That'll be a cheap car to make, but also cheap from a cost point of view, and that will also help margins down the road. So I think that margin story right now is sort of taking a back seat at the moment for Tesla. It's more about Cybertruck potential issues or challenges, and then also sort of that outlook. Can they reach that outlook given what's happening with the global economic environment?
Shares of Tesla have gone off-road today following a disappointing earnings report, missing on both top and bottom lines. Company's cost-cutting efforts have been attributed to the downward pressure on margins. But our reporter, Ali Garfinkel, says the lack of growth in recent times may be down to an overlooked competitor putting the brakes on Tesla in biggest EV market globally. Ali, over to you.
Hi, Josh. So Tesla's meteoric rise has always been about the promise of growth. But one key linchpin to that growth might really be slipping away here, and that linchpin is China. Now, it's hard to overstate the importance of China in the global EV market. In 2022, China accounted for 60% of global EV sales. And instead of making progress there, Tesla is actually losing ground in China. Tesla's market share in China has been on the decline, falling from 15% to 10% from 2020 to 2022. And I've sort of identified two key reasons that Tesla's really been lagging in China. The first is competition, which is subsidized heavily by the Chinese government. We do know that on a geopolitical basis, China has been very interested in owning the EV market. And that means they have really helped bolster competitors like BYD, which has really specialized in affordable EVs that are made specifically for the China market. The other thing to consider is Tesla's really had some self-inflicted wounds. There's really no other way to say it. Remember, China is a key market, and it is also a market where people are making less than $10,000 a year for the average urban worker, which means Tesla price points might actually not be ideal. So affordability is going to be a key problem for Tesla moving forward in China. There's an incredible story in Walter Isaacson's book about Elon Musk really being interested in the robo-taxi and pushing aside the possibility of pursuing a Tesla that was maybe around $25,000, $30,000. And you have to wonder if that's a decision that, especially in light of yesterday's earnings, that Musk would make again today.
I wonder a lot about those decisions. But beyond China, talk to us about market share in the rest of the world for Tesla.
It's a good question, Julie, and it may be unexpected, but the best jumping off point for having that conversation is actually talking about the U.S. Now, Tesla has been known for its dominance in the U.S. EV market. But that dominance has been trending downward. In 2020, Tesla's grip on the U.S. EV market was 79%. Today, that number is 58%. Now, especially amid that sort of dwindling dominance in the U.S., comes from more competition, of course, but it also makes these emerging markets like China that much more important. India is another emerging market that we know Elon Musk is incredibly interested in. But that said, I've had a lot of experts tell me that, again, because of these affordability concerns, Tesla's not necessarily set up to succeed in India either. So for Tesla, what I would say is right now that race for global dominance is still far from won.
Well, shifting gears now, we're talking Tesla, extending those declines after its lackluster third quarter earnings report. Now, CEO Elon Musk's comments about affordability and the slow Cybertruck rollout adding to the EV adoption fears. Now, we have a Tesla investor joining us to give his key takeaways from that interesting earnings call. Let's bring in Kevin Paffrath, financial analyst and YouTuber. Meet Kevin. Good to see you, Kevin. So, as
Thanks
a
so much for
Tesla
having me.
investor, you're so welcome. I know this was not the earnings call that people were expecting. I mean, we're used to the kind of Musk that we see on X, who sort of dips into everything, but this was an earnings call. What were your big takeaways from this?
Oh my gosh, this was terrible. I feel bad for him. Look, he's got a lot of things going on, legal battles, custody battles for his kids now, but it doesn't justify acting like Trump on Twitter, stonewalling the SEC or the European Union, and quite frankly, turning into a little baby on the earnings call. I mean, he was almost in tears. It showed a complete lack of leadership. Tesla's a leadership-less company right now, and it's terrible. That's why their CFO just left, I believe, as well. And this is a slap in the face to everyone. It's not just the shareholders, but it's a slap in the face to the other managers who are still there and the over 100,000 employees at Tesla. For a leader to cry about the economy rather than funneling that and coming up with a plan is pathetic. See, he's slow walking his plans to build the Mexico Gigafactory because he's worried about the economy. He's afraid, but he should channel that. And he should instead negotiate with the Mexican government, provide a clear formula. Rates go up, prices come down. It's not that hard. But Tesla still has industry-leading margins, over 16.3% go into gross profit. Out of every $100 they make, $16.30 go into gross profit, beating every other American EV manufacturer and even a legacy auto manufacturer. They have so much going for them, but they should provide a clear formula. They should advertise to higher income areas, and they should provide a clear path for margin expectations. We got none of that. We got a leaderless Elon Musk who was afraid to be on an earnings call, who sounded beat down and like somebody who's basically leading Tesla into a directionless path forward. It's disgusting.
Well, Kevin, regardless of how you interpret Elon Musk's comments, we are seeing that reverberate throughout the EV sector. You look at where shares are among Tesla's competitors, all down, partly because of what we heard from Elon Musk saying that higher rates are sapping demand. Is that the whole story here?
Well, yeah. I mean, look, it's obvious that when rates go up, car prices become less affordable. It's the same thing for home prices. There are less buyers. Now, when it comes to homes, there are also less sellers, so you have a little less fluctuation. But in vehicles, everybody's producing more. So of course this is normal. But Tesla should be playing its strengths here. Tesla's strengths are out of everyone who's in this hard economy. Tesla is still generating massive profit per vehicle, massive free cash flow. The only pure play EV in America to actually be generating this cash flow. There's so much potential. They're so close on autonomy. They're so close on a revolutionary new vehicle, the Cybertruck, which is an exoskeleton rather than an internal skeleton for a vehicle. These are great products, and the people at Tesla should be cheered for this. But we need to know the lights at the end of the tunnel rather than hearing a complaining CEO who's not actually providing that path. This makes people nervous and scared. It makes people want to quit
Kevin,
Tesla
if we
and
look
not
at the
be part of that.
If we look at the sector as a whole, though, I mean, the declines we're seeing today, not in Tesla, but in the names like Rivian, Lucid, I mean, they all have their individual stories. But is that warranted when you consider the higher rates may be sapping demand right now? But I guess the question to you is, does that long-term play for EV demand, does that remain intact still?
Oh, absolutely. 100%. Look, like long-term, 5-10 years down the road, everybody's going to want an electric vehicle. The range won't be an issue. There'll be charging stations everywhere. You'll be able to charge faster. Then you can fill up your tank of gas. These cars are much safer. They're much less likely to catch fire. They're much less likely to roll over. You don't have fuel in the back of your car in the gas tank. These vehicles are phenomenal. The acceleration's better. The handling's better. Everything about electric vehicles is better. Problem is, you have, Elon acting like Trump on Twitter, and he's really frankly upsetting a lot of people. There are a lot of, especially women, which is another demographic Elon should be playing towards, upset and who would never touch a Tesla vehicle. So I'm very frustrated with Elon, but long term, EVs will be dominant. ICE cars will go away. That is very clear. That long-term trajectory stays intact.
And Kevin, I want to ask you about delivery numbers, because one of the things that we're expecting potentially is for more price cuts because Tesla's feeling pressure to meet those delivery numbers. But I want to talk about the game changer that's supposed to be the Cybertruck. I want to play you this soundbite from the earnings call from Musk.
We dug our own grave with Cybertruck. It is going to require immense work to reach volume production and be cash flow positive at a price that people can afford. It will take, I don't know, a year to 18 months before it is a significant positive cash flow contributor.
So if they've dug their own grave with the Cybertruck, what are the expectations? Where does Tesla go from here in terms of the next leg up in terms of growth?
You know, really, I'm shocked that he would say something like this. The Cybertruck, and he mentioned it in another part of the earnings call as well. The Cybertruck could be the leading source of cash flow for Tesla in the future. But of course, when you ramp a new product, it's going to burn money at first. Of course, when you have a new innovative product that nobody's created before, that you have to create the systems for, the new parts for, whatever, of course it's going to be expensive at first. But a way to phrase this much better would be, look, we are the only pure play EV in North America that is actually profitable on the cars we sell. We're going to reinvest that profit into making what could be the greatest vehicle ever manufactured, the Cybertruck. And in 18 to 24 months, we think that is going to drive the greatest cash flow we've ever seen at Tesla, greater than anything we've ever seen before. That's the leadership we need, because what does that do? It motivates shareholders to support Tesla. Tesla doesn't have as much cash as people think. They're like, oh, they have 26 billion of cash. Yeah, well, they got a pile of $23.5 billion of bills on their desk. They just had to borrow $2 billion more just to stay afloat. They don't have as much cash as people think. So the cash flow matters. And we need that vision that what we're reinvesting for is actually going to be worth it in the future. Otherwise, if I'm a Tesla employee working on the Cybertruck, I listen to that earnings call, I'm like, screw this. Why would I work for this company? Why would I work and spend my efforts on this car if even our leaders like, oh, we're digging our own grave? It is a stupid thing to say. This was a disgusting earnings call. Elon should be banned from the earnings call. Quite frankly, he should just be an outside consultant, because all he's doing now is he's blocking people on Twitter who are criticizing him, and it's disgusting.
Tesla taking a hit today after its lackluster third quarter earnings report. One of the key points investors walked away with was warnings around the highly anticipated Cybertruck. CEO Elon Musk saying on the call that Tesla dug its own grave with the Cybertruck. He also called it a special product and said products like it are, quote, incredibly difficult to bring to market, to reach volume, and to be prosperous. Our next guest doesn't seem too worried about the Cybertruck, but he would like Tesla to consider pivoting to becoming a tier one supplier. Let's bring in Tom Narayan, who is the RBC Capital Markets lead equity analyst in global autos. Tom, broad strokes first and foremost here. I want to get your takeaway from what you heard on the call and what Tesla had to report in this most recent quarter.
Yeah, I wasn't actually that surprised, honestly, by the gross margin print. I mean, they took some production intentional shortfalls this past quarter for upgrades. Musk definitely had some commentary on 2024 that kind of spooked investors. Cybertruck comments you pointed out, Mexico facility, which means we won't have these, millions and millions of Model 2s out there. But I think ultimately we're all missing the greater point here, which is I think Tesla is slowly trying to pivot away from being a huge volume car maker and into becoming a tier one supplier to other OEMs. We've seen what they've done with charging infrastructure. They're making so many batteries subsidized by the US government. They do power electronics, the biggest maker of these. I think they sell these things to OEMs and then ultimately get really what they want, which is licensing and selling FSD, which is really the profit center, and gets them to the next step, which is robotaxi. So it's part of the roadmap that begins with cars as a proof of concept and migrates to becoming a tier one supplier and then eventually a robotaxi maker.
So, Tom, if investors aren't appreciating that from your point of view, I guess, what does that then tell us about valuation or how Tesla then should be valued given this pivot that you see Tesla undergoing right now?
Yeah, I think it's, a really good comparison I look at is, I don't know if you guys remember Netflix in like 2011 to 2013 went through a weird transition of renting DVDs to streaming. And it was a problematic transition. It wasn't communicated well and the stock suffered. Here, I think what's happening is Tesla is trying to make this transition very gradual and communicate to investors gradually what they're trying to do without just yanking the blanket off the rug. So I think now what's happening is on valuation, people will see all they have to do is cut some pricing on FSD. That will show margins increasing. People will actually see how amazing that product is. And they'll pivot in how they value the company. Instead of looking at it as a car company, they'll start looking at it as a software company, assign a higher multiple. And once you start seeing them winning licensing deals with FSD, I expect folks to start looking at this as trading at a 10 times revenue multiple on forward sales as opposed to earnings or EBIT or whatever people are caring about right now during these earnings calls.
But there's a lot that has to go right in order for robotaxis to be and to hit critical mass and to be an everyday option for a lot of riders out there at that point, or potentially even other companies who they would be licensing or selling into. What does Tesla need to get right along that roadway?
Yeah, I mean, you're absolutely right. This is no easy path. The way I look at this topic is top down. I believe in robotaxis. They are the future. They will transform society for the better. Regulators want it. So I believe it will happen. And I also believe it'll expand the pie for autos tremendously. It'll take share from other forms of transportation. It's a bedroom on wheels. It's a living room on wheels. It'll just make autos so much bigger. So then I just
But
give
from how
credit for
you're
Tesla
valuing it,
Yep.
but from how you're valuing it, Tom, what time span do they need to complete that by?
No, I'm valuing it by 2040, and then I'm discounting it back. So this is definitely far out. Cities have to be re-engineered for this to work. No doubt about it. This is not something that has to happen overnight. I think it's a proof of concept model. First, show FSD. That gives people faith that they have the best technology. You'll also see regulatory environment get in there. I think regulators will mandate FSD type products. They save a lot of lives. FSD is 5 times safer than regular cars. And then that'll give them more credit to run with. And then, yeah, by 2030, 2035, you'll see way more of these robotaxis on the road. People get more comfortable. So it's a slow bleed. It's not going to happen overnight for sure.
Tom, I know you're not focusing a lot on the Cybertruck here, but I got to ask you because the street is focusing on some of the comments that we heard from Musk just in terms of how challenging this product has been to produce and what that runway looks like going forward, or how long it's going to take until we do see the Cybertruck be profitable here for Tesla. What does this tell us just about how challenging bringing a vehicle like this to market is, and what you think that opportunity realistically looks like for Tesla?
Yeah, and I do want to just make a note about the conference call itself. I mean, I've listened to several of these conference calls, and sometimes it depends on Elon's mood. And you have to kind of keep everything with a pinch of salt when he's talking about stuff. So I think what he was getting at is how technologically sophisticated Cybertruck is. His goal is to make it affordable for regular folks. If you look at the pickup truck market in the US, the EV pickup truck, they're super expensive. So it's going to be challenging to make this thing profitable, given how technologically advanced it is. I don't think people should come away with this as going to be a boondoggle or anything like that. This will ultimately be profitable. But at the same time, this was never meant to be a very important product for this company. Ultimately, this company, it's all about FSD, all about autonomy, all about robotaxi. Don't get caught up in the noise. It's a great product that they have to highlight their technological advantages, but I don't think it's something that derails a story.